What's up, Kansas City? This is Murray Anderson, the host, and we have here today Mr. Dell from the Federal Reserve Bank of Kansas City. He is the Senior Community Development Advisor, and we're kind of going to give Dale an opportunity to kind of tell us what does the bank really do and what it's doing in Wyandotte County and what that's all about and so forth.
Sounds good to me.
Well, tell us what you do. What's the bank really about?
Oh, okay. I give you the 10,000 foot level. What's up, Kansas City? So the Federal Reserve Bank is the monetary policy institution of the nation. We're what is known as the central bank. Basically, we're responsible for two primary objectives, which is controlling inflation and working towards full employment, across the nation. We're not a government entity. We're a quasi-government entity. We're not a bank, so you can't come in and get a check cashed or anything of that nature. We're not a bank like that.
Okay.
We are a bank to banks. And so, I affectionately say to my daughter, we're the most powerful financial institution in the history of the world.
Absolutely.
Because when you look at the total national or global economy, the size of the American economy, the role that the Federal Reserve Bank plays in that economy, when we make monetary policy decisions, it really shifts the way the world economy goes. And so that's why a lot of eyes are on us. We have a board of governors and 12 independent banks. The board of governors, which is in Washington, is all appointed by the president and confirmed by the Senate. And then there's something called the FOMC, or Federal Open Market Committee, which is where they go and talk about issues of monetary policy.
Yes.
Now, for the average person, the easiest way to think about one of the primary roles of the Fed is when you get a loan, that thing called the interest rate. So when the Fed votes to increase or decrease the interest rate, it directly affects your borrowing, like on your credit card, your home mortgage, or other things of that nature.
Okay.
But we do have a little-known function that my department called the Community Development. The Community Development departments are actually in all 12 banks and also at the Board of Governors. And we are one of the few actually congressional mandated functions of the Fed. Our department came out in the 70s due to what is known as redlining. Some of you may be familiar with that. Is when banks would take deposits in an area but not make loans to that same area.
Right.
It happened in a lot of minority communities.
Right.
And so from that, Congress passed what is known as the CRA Act, the Community Reinvestment Act, which requires banks to do a certain amount of either lending or other types of services in all the areas where they take deposits. And so our department was born from that, and since we've morphed from just focusing on that CRA or community reinvestment to working on issues across low to moderate income communities. So for example, the Federal Reserve Bank of Kansas City has a couple primary functions. I do small business and economic development for our 7 states, and I probably need to explain to them what our 7 states are. So basically we have Kansas City West, we have Nebraska, Kansas, Oklahoma, Colorado, New Mexico, Albuquerque up to the north, and then we have Wyoming. So that's our territory.
Okay.
So my responsibility is small businesses and economic development. So I'm actually from Omaha, so what's up Omaha too. Then we have somebody that handles workforce. He's from our Oklahoma City branch, someone that actually focuses on CRA and community development. That's from our Denver branch. And then locally, we have Jeremy Hagley, who some of you may know from U.S. SourceLink before he came to work for us.
Okay.
And he handles financial stability and neighborhood stability.
Okay.
And so that's the bank in a big level, and that's our department in a small
Okay, well, tell me what is the Federal Reserve Bank of Kansas City doing in Wyandotte County with Econ Avenue, and what that really means, what its purpose is, and why are they doing what they're doing?
Great. So I have a phenomenal boss from Kansas City, well known across the Kansas City market. Some of your viewers know her. Tammy Edwards. She's our VP and Community Affairs Advisor, Community Affairs Vice President. And a couple of years ago, probably about almost 4 years ago now, she came to our team and said, we want to do something that could move the needle in one of our communities, because we only have like four people that are like me, a senior economist and a research associate on our team. So we basically have 6 people to serve 7 states.
Okay.
And so what we tended to do, and we still do, is we do a lot of work in terms of creating articles, information, sharing resources, connecting organizations together. But she said we want to look at one particular community and see if we can do something that can be innovative and make an impact within that community. And so, we initially came up with it, and the term was the Community Wealth Development Project. And that was my title, but they quickly shot that down because it's kind of a lame title.
That sounds good to me, though.
Well, but it was,
Well,
yeah, right, because it was more of a description versus a brandable. We're at the media company, so it was more of a description versus a brandable type of deal. And so we eventually converted it to what you know as Econ Ave, what they know in Wyandotte as Econ Avenue. And for the viewers, this is a very simple concept. I'm explaining to you how wealth is created in communities in a very simple fashion. You bring dollars in. Most of you are familiar with the concept of recycling dollars, and you build assets. So how do you do that? That's the question. You do that by, do you bring dollars in by first creating businesses that actually sell outside of the community?
Right.
Or you have somebody that goes and works outside of the community, they bring dollars back into the community and spend it in the community.
Correct.
Now, to spend in the community, what do you have to have? You have to have businesses that you can spend on in the community. So if your community doesn't have the same level of businesses or the types of businesses, you have what's known as leakage.
Right.
Meaning more money goes outside of the community than what comes in.
Right.
When you have leakage, you tend to have poor communities, which is what you saw in where we focus on 66101, which is actually was when we originally did the analysis was the poorest zip code in the state of Kansas at the time. And so you build assets. An asset is something that you own that you can then turn around and sell later, primarily through home ownership.
Yes.
So you talk about issues of home ownership. You recycle the dollars, of course, again, by creating businesses within the community that you can then purchase from. And so you bring the dollars in, you recycle the dollars, you own things.
Yes.
So any community that doesn't bring dollars in at a significant level, doesn't have businesses that can recycle the dollars, and has low home ownership, is way more likely to be poor. We can go all across the nation. I speak all across the nation. All of the communities, and many of the times they're people of color, communities with people of color are facing these same conditions. And so what we said was, what if we could come and work with the community to empower the community, to support them from an institutional standpoint of the Federal Reserve, not come in like happens all across the nation, where organizations come in and say, hey, we know better than you about your condition. We're going to tell you what to do, and then as long as there's energy, as long as there's attention on it, there's activity, you get the people hype.
Right.
They're like, oh, we got this new organization coming in, they're bringing all this grant money, they're going to create all this change.
Right.
And then when the grant money leaves, the organization is gone, the community's like, man, now you left us. So it's like a broken relationship over and over. And our communities get depressed when you do that.
Right.
So we said the best way, and the analogy that I use is I say a pyramid is not designed to stand on its head.
Correct.
It's designed to sit on its base, and the base is the people.
Right.
Instead, we have historically, since the 70s, flipped that model, and the people are the last ones engaged in the process. And so they're on the bottom. And so when anything happens to that pyramid, because it's upside down like this,
Correct.
anything thumps it, anything shakes it, it falls, and the whole process crumbles because it's backwards.
That's right.
So we tried to correct that pyramid to put the people in the forefront, and then everybody else becomes a partner to the people versus telling the people what they need to do in any given situation. So that's the approach that we took, which is fairly innovative for the modern era. It's not really innovative in regard to how communities used to run, because the way communities used to run is they relied on each other, they strategized with each other, they figured out ways that they can do things together. And then in the 60s and 70s, you saw an evolution of this community development model and engagement model to where it was now like you have the nonprofits or the government agencies, then you have the funders on top, the agencies, and then you have the people. And then the agencies were the ones that said, oh, we know everything about your situation.
Right.
And so all the information was filtered through these nonprofit agencies or the bureaucrats in government who said, I know better about these people's conditions than what they do. You need to listen to me as an organization. Give me money to go out and serve.
Right.
And so as a result, the people were left out of the equation. But who's the person that has the most vested in stopping violence at a community? It's the people that are, it's the people that live it.
Who are experiencing the violence.
The people that have the most vested in reducing poverty in the community.
The people who are in
People that
poverty.
are poor. And so they've been left out of this conversation for so long, and I've seen it over and over and over again. And so this is based upon my personal experience of coming from Omaha, Nebraska, where in 2008, a Pew report said that we had the highest rate of African American childhood poverty in the nation and the third highest rate of adult childhood poverty in the nation for African Americans. And I'm like, I've seen the models or the methods used to kind of address that condition. And it was always these people up here saying, we're going to create a program to fix these people here, versus saying, we're going to come side by side and empower these people to create change in their own community. So that's what we're trying to do at the Federal Reserve Bank, is to really support that community over there, which is in our region, to help pull them together to create solutions that they can partner with other people and work on their own behalf. We brought in a new partner recently, some of you may be familiar with, Communities Creating Opportunities, to provide more support to the community in that regard. So we feel we've done a good job over the last 3 years in regard to pulling people together, but we really need to push it to the next level at this point.
So what do you see as the greatest challenge right now in terms of being able to connect the people who are disconnected really from the central core message that really frames policy in terms of how you really deal with economic development issues, how you really provide resources and tools to the people who are experiencing the greatest problem and the despair?
And I want to caveat this, and I probably should have said it earlier. These are my opinions and not necessarily reflected of the Federal Reserve Bank as a whole.
I can appreciate that.
So when we talk about community development, the number one thing is, people have to establish a firm sense of ownership. By that I mean they have to truly believe that they can create control and create change and create growth in their own environment. That's often not the case when I work in low-income communities, whether it's urban or rural. They always feel like something's imposing itself on them, because in reality it is. But you create a sense of local ownership and control, of belief, because that's what we believe is real. And if you don't believe you can control it, then you will act as if you don't. If you believe you can, you will act as if you can. To me, what I do outside of EconAv is, like I said, small business and economic development. I've spoken all across the nation on these particular topics, and one of the things I try to communicate as effectively as possible at the community level is that we have to empower communities, and you do that through ownership. And the kind of ownership I'm talking about is the ownership, the control, the production of your jobs, and the access to wealth, which can only be done through business ownership.
No, it sounds
Home
true.
ownership, you can create wealth through home ownership.
Yes.
As a secondary way of creating wealth, but your
Right.
primary way of creating wealth at the community level
Right.
is through the production and the creation of a job, whether that business is in your community or outside of your community, where you then bring the wealth back to the community. And so anytime I go into a low-income community, particularly a minority community, I can guarantee you a few things have occurred. One, they believe that jobs are created external to themselves.
Correct.
That's why, going back to the 60s, all the conversation was around jobs. Even Martin Luther King, before he passed away, was moving into the jobs movement. Jobs don't grow on trees. Somebody has to create jobs. And who creates and controls the job is equally important, if not more, than the job itself to the community. So when we go to Wyandotte, when we come to East of Truce, when we go to North Omaha, when we go to Denver or whatever, into these minority low-income communities, you're going to see a lack of high density of businesses, high growth businesses, businesses that produce a lot of jobs, and business owners that have a civic mind that when they do create wealth are willing to come back and reinvest in their community. And so that, to me, that's the starting point. Now, you still want to do things like connect people to jobs that fit, because business growth takes time. We can't just say, well, these low-income communities should just create all these businesses. We can say it, but you got to grow businesses over time. So in the meantime, we got to figure out how to address issues of underemployment, what is known as structural unemployment. For the watchers, that's an economic term that means the skills that the job requires the community people don't have. So even if a job's available, they can't get it because they don't have the skills, which is happening in your community,
Right.
Wyandotte. So we need to do that. We need to encourage stronger home ownership. Smarter financial literacy. How do people manage their money?
Right.
Let's use African Americans, black people across America. We have a $1.3 trillion purchasing power according to Nielsen.
Right.
That would be the 16th largest economy in the world if we were on economy. But there's a difference between purchasing power
Right.
and economic power.
Right.
Purchasing power is what you can spend. Economic power is what you own.
Right.
And so we need to convert our purchasing power to economic power. And I use it within the context of African Americans, but it's in the same thing if you go to Hispanic communities or even low-income, non-minority communities. These concepts are universal. And so what we want to do in Wyandotte is really help folks understand, okay, how do we help, the community? How do we help empower the community to help people gain the skills to access the jobs? How do we help the community create businesses to produce the jobs? How do we help the community understand and prioritize the value of home ownership in the community and help people get into high-quality homes? Because if we do that, the wealth will raise.
Well, here's a question that I think that we also have to address, and that's the capital question. In that there are a number of studies, one produced by the Minority Business Development Agency that operates inside of the United States Department of Commerce, that says that in minority communities that access to capital is the number one impediment that does not allow business growth to take place in the underserved communities. So I think that somehow, some way, the Fed has to hear and see and feel that voice of, and create the ways and means to provide this group, our group, with equal access to capital, because you can't change a community without having access to capital. Not loans, but capital.
And the best way that I explain capital or even loans is that it's a tool.
Yes.
And so if you're trying to build a house without a tool or inferior tools,
Right.
it's going to be more difficult to build a house.
Absolutely.
So, and there's a lot of issues that go into access to capital or lending. Some of it is a private market issue, some of it's public, some of it's regulatory,
Right.
some of it's self-imposed. I mean, if you have a bad credit or you don't have a quality business plan, it's going to be difficult. So I know at least for our department, I can't speak for the Federal Reserve Bank as a whole, we continually are looking for ways to figure out and identify what those needs are and then how to connect them to it. Some of the private market stuff, that's a tough question because venture capitalists want a return on investment if we're talking from a capital standpoint. So,
Right.
so there's a lot more into that question, and she's given us the 1 minute sign. So maybe on the next one we can talk more in detail about that.
Well, this was great stuff, and it's What's Up Kansas City, and we're at the end of this journey for right now, and we'll be back again.
I'm IFBB Bikini Pro Cat Williams, and when I'm not working out in the gym, I'm searching the web on Cascade Media and What's Up Kansas City. So make sure you check them out.